Welcome to the Ticker USA, your source for gold, Bitcoin, and global market updates. We're tracking some seriously breaking developments in the commodities market today. One of the world's oldest assets is facing a critical tipping point, and you're going to want to pay close attention to this.
Gold recently smashed past $2,400 an ounce, hitting historic, absolutely staggering highs. But right now, warning signs are literally flashing red all over the dashboard. Is gold about to crash again? Are investors overreacting? The answer to that question could impact millions of portfolios worldwide. So we're cutting through all the noise today to bring you the actual data driving this market.
Section 1. Why did gold rally? Unpacking the historic surge.
Okay, to figure out where we're going, we really have to understand how we got here. Four massive macro forces basically poured gasoline on this unprecedented climb. First, you've got persistent inflation just eating away at fiat purchasing power. Second, incredibly aggressive central bank buying. Foreign governments were stacking physical reserves at a record pace. Third, sweeping global economic uncertainty. And fourth, a massive spike in safe haven demand.
It's really that last point that flipped the entire market upside down. Unprecedented safe haven demand. When global uncertainty hit an absolute fever pitch, we saw this synchronized flight to safety. It wasn't just retail investors looking for a life raft out there. Institutional giants, sovereign wealth funds, they were pouring billions into the yellow metal, basically viewing it as the ultimate financial hedge against global instability.
Section 2. What has changed now? The emerging warning signs.
Because, look, the winds are shifting, and they are shifting fast. Breaking down current market sentiment right now, we're tracking four critical shifts that are creating immediate downward pressure. We're looking at a significantly stronger US dollar, severely delayed Federal Reserve rate cuts, higher overall interest rate expectations, and frankly, a massive wave of investor profit-taking after hitting those historic highs.
Let's dig into the Federal Reserve component for a second, because this is where the market really got blindsided. Earlier this year, Wall Street had completely priced in early, aggressive Fed rate cuts. It was practically a given, but the reality? Delayed action. Inflation proved way more sticky than anyone thought, keeping interest rates higher for much longer than anticipated. And this drastic shift in monetary policy, it has fundamentally altered investor sentiment.
And those higher rates directly feed into a recovering US dollar. Now, in global finance, gold and the dollar typically have an inverse relationship. It's like a seesaw. Because gold is priced in dollars on the global market, a stronger greenback makes the metal substantially more expensive for foreign buyers. And what does that do? It triggers international sell-offs and localized profit-taking.
Section 3. Correction or a crash? Analyzing historical precedents.
Let's ground ourselves in the data. If we look back at previous gold market cycles, they actually show a pretty distinct pattern. Typically, in year one, we hit past bull market peaks driven by some kind of acute crisis. Then in year two, as the panic sort of subsides and dollar strength returns, we enter the subsequent pullback phase. It's a healthy cooling off period that shakes out all the speculative hot money. Finally, by year three, we often see long-term trend resumptions. So history strongly suggests that sharp pullbacks are frequently a feature of gold bull markets, not necessarily the end of them.
Section 4. The bull case, the argument for continued growth.
The bullish perspective here relies on hard, structural economic realities. First off, that persistent underlying economic uncertainty hasn't just magically disappeared. Geopolitical tensions remain incredibly high globally. Second, long-term inflation fears remain deeply embedded in the market psyche right now, and crucially, if prices do dip, central banks may just resume their aggressive buying, effectively placing a firm floor under the market price and driving the next leg up.
Section 5. The bear case, the argument for downside pressure.
But honestly, the bears have some serious firepower right now. First and foremost, Treasury yields remain incredibly high. Remember, gold yields absolutely nothing. It just sits there. So when you can get a guaranteed 4 or 5% return on a U.S. Treasury, holding zero-yield gold becomes highly unattractive for big money managers. Combine that with a strong dollar actively suppressing commodity prices across the board, and you've got a recipe where current profit-taking could rapidly accelerate into a much broader sell-off. So the market is effectively locked in this trillion-dollar tug-of-war. The bull case heavily relies on gold's traditional roles, serving as a safe haven in volatile times and acting as the ultimate hedge against inflation.
Meanwhile, the bear case is driven by modern financial gravity, a dominant strong dollar, and stubbornly high interest rates that are actively pulling capital away from precious metals.
Section 6. What to watch next. Key macroeconomic catalysts.
All right, these are the 4 absolute pillars that will dictate gold's next major move. You need to monitor upcoming inflation reports. Any surprise heat in consumer prices is going to send shockwaves right through this market. Watch the Federal Reserve meetings like a hawk for any shift in rhetoric. Track the dollar strength index daily, and finally, keep a very close eye on global economic developments that could suddenly reignite that safe haven demand we talked about.
But look, if there is one single takeaway from today's explainer, it is this: monitor central bank action closely. Ultimately, the Federal Reserve's tone on interest rates is going to be the ultimate deciding factor for this market. A hawkish Fed keeps gold suppressed. A dovish pivot, that unleashes the bulls. Literally everything hinges on the Federal Reserve right now.
Now, we want to hear from you. What do you think? Major correction or temporary pause? Let us know in the comments below. Your insights help drive the conversation.
This is the Ticker USA. If you want to stay ahead of the market, subscribe now for the latest updates on gold, Bitcoin, inflation, and the global economy. Thanks for watching, and we'll see you in the next update.